Welcome back. This is Chili Davis, and I'm back to do another video. This video is going to be about the stocks coming up on earnings call this week, and also about my top stocks, of course. So on 8:30 Monday, we have Zoom stock will report. On Tuesday, 8:31, CrowdStrike, the cybersecurity report. On Monday, Lee stock, this is the Chinese EV play, will report as well on 8:30. On 8:30 Monday, also Acoustics Technologies. These are the 5G wafers. On 9/1, Wednesday, Chewy, the pet store online, Chewy will report earnings. 8:30 on Monday, Cloudera, the cloud software company, Cloudera, will report. And we'll talk about Docusign. This is the electronic signing documents. This will report on Thursday. So these are the 4 or 5 stocks we'll talk about on this video. Just to let you know, stocks that I do hold: Amazon, Google, CrowdStrike, which we'll talk about here in a minute, Snap, CMG, which is Chipotle Grill, Shop or Shopify, Uber, Nucor, Coin, Upstart Holdings, Square, Apple, Airbnb, and Facebook. So those are some of the stocks I hold. So just to give you an idea of my portfolio, what type of stocks that I own. So we'll now go ahead and talk about CrowdStrike, which will report on tomorrow. When I say earnings call, how much revenue did they make for the quarter? And also they'll give guidance for the following quarter. So CrowdStrike was up over the last 5 days. As you can see, it was $243 per share the previous week, and now it's trading at $282 this week. So CrowdStrike is on the move. They'll probably have some good earnings revenue for the quarter, considering more companies need more cybersecurity. Also, on Wednesday this week, they were added to the NASDAQ 100. The stock can probably only go higher. The 52-week high is $285 per share, and the 52-week low is $113 per share. Now, I don't expect any pullbacks, but if they do get some negative information on earnings call, it could go backwards some. Right now, the stock is very hot. If you don't already own it, I will wait for a pullback. If you're thinking about owning it, sure, buy a few shares, but just realize to get the optimal position, the optimal price, you want to pay a little less for it, like maybe $250 or $260 per share. But right now it's completely hot at $285 almost a share. And so just be mindful. They did enter the NASDAQ 100 this past week, and the stock is in high demand. So lot going on with CrowdStrike. The next ticker symbol we have is OKTA, or Acoustic Technologies. They will report this week as well. They have not moved a lot. I bought this stock at like $8 per share, and the last 5 days it's been up, but it has gone as high as $12 per share. Just to let you know, okay, the 52-week high is $19.15. But it has struggled. It is really have bounced between $7 and $8 and not past $14. So if we just look at the last year, the stock went as high as back in February, $18.58. I thought it was headed for a serious breakout, but it has completely fell back. So again, this is 5G. Maybe it has, with the delay of Verizon and AT&T releasing 5G phones and 5G technologies. So it's a good company. I just don't see the value being showed. So keep an eye out on Acoustic Technologies. Again, they report this coming week. And they have a high of $19.15. Like I said, what'll make a stock go down is if they give poor guidance. So let's just see if they had good revenue and what they give guidance for the next quarter. The next stock we have is Docusign. Now this stock has sort of hit a peak since the pandemic is over. It's kind of solidified its position as a good, valuable stock. It trades at $300, but before the pandemic, you would have got this stock for about $100. So let's just take a look. September 2020, stock was 193. And back in September 2019, the stock was traded at $65 per share. So Docusign, I'm sure many of you used it. People send you a document you need to sign. You can click your initials, and then you can do a signature finally at the bottom of the document, and they record it, and they allow you to log into a portal of some sort to see a signed copy. And it's just like signing a physical document. So that is Docusign, headquartered out of San Francisco, California, and it allows organizations or persons to manage electronic agreements. So that means contracts. When they say agreements, that means contracts. So if you need to sign a non-disclosure agreement form, you're using Docusign. Primarily, there's other technology. I know Adobe has a product too, but Docusign was the main one that hit the market 2 years ago. All right, so the 52-week high on the stock is $314. So it's nearing the $314 at $300 per share. I don't expect any pullbacks. If the stock ever falls back into the mid 200s, you might have a chance to start picking up shares. But right now, this stock is really expensive. This is really expensive. You're not gonna, if you start buying this stock now, you're not gonna get much bang out of buck out of it, because even if it goes back up $14, that's not even 10%. Okay, so Docusign, again, is trading at $300 per share, and they also report later this week on earnings and revenue and guidance moving forward. But it's a solid company. Other than that, I mean, if you just want to own something that you know people use every day, Docusign is one of those companies. I mean, but they don't pay a dividend. So like, I own Nike, I own Disney, but they pay dividends. So I appreciate just holding them. I don't get a lot of appreciation, but I get this thing called dividend out of them. All right, so Docusign's reports later this week. Also, Zoom video communications. They've been down this last month, and they've been relatively flat for the week. I don't believe Zoom is going to get much more bang out of the buck. They, ever since the pandemic is over, they have had more competitors come into the field. So if you got it before the pandemic, you might have seen something. So 2019, you would have got the shares at $91, and now it's trading at $300. So you'd have tripled your money. But now the stock is pretty much flattened out, and there's hundreds of other peer-to-peer video software. I could think of one called Microsoft. They have a very similar product where you can do video calls, text calls. If you think about it, Slack. I don't know who Zoom has contracts with. I don't know if they have government contracts, but they are probably in the top 5 of teleconferencing software. But if you want a teleconference, basically all platforms have some product or service, whether it's Microsoft or Facebook or Slack or some other cloud software. The 52-week high was $588 per share. I really don't think it'll get nowhere near back to that. But we'll have to see on guidance what is expected of Zoom video. Everybody uses Zoom. I'm using Zoom right now for this video. But like I said, the stock probably will not fare well in this market moving forward. They've made some good acquisitions. But let's just see what the revenue call says and what the guidance says for the next coming quarter. All right. So that's Zoom. And let's do Cloudera. It's another cloud software. I don't have any really feelings about Cloudera. Okay, the stock trades about $15 per share. It had some hot moments at $18.49, and now it's kind of flat again at $15. I don't know what they're going to have on the quarter, but pretty much the stock has been flat. So that's Cloudera. If you want a cloud software to own, Domo stock. This is out of Utah. Domo is a cloud software company based out of American Fort, Utah. I believe Domo has a lot of room to go. Over the last 6 months, the stock has been up. So if you got the stock back in April, the stock is now trading at 30% more at $89 per share. And it's had a peak of $98.35 per share. So if you want a good cloud software to invest in, Domo has partnerships with Target and ESPN and some other well-known branded companies. Where will Domo go? This is by Investors Observer, down 2% in a week. Also, some of the founding investors on Domo is Jeff Bezos. So don't cap Jeff Bezos out. Domo stock slips as soft guidance pressure second quarter beats. Shares are down 6% in the second quarter. Report earnings. Q2 earnings report yesterday beat Wall Street's estimates. So beat Wall Street estimates, but the stock still slipped. But I'm long-term on Domo. So Domo, if you look at over the last year, the stock has doubled from $40, around $40 a share to $89. So the last yearly forecast is done very well. And I mean, the only thing you could do, wait for Domo to fall maybe to 80 something now, 85, 83, but pretty much the stock is going to stay high. There's a lot of value in Domo. They give real-time data to Target and ESPN and some other big healthcare service companies. So keep your eye on Domo as far as cloud software. All right, so these are the 5 stocks to watch for the week: Zoom, CrowdStrike, Acoustics, Cloudera, also Chewy, and Docusign. Let's take a look chart at Chewy. I don't know if they're trading at 100 or 105. Okay, they're trading at $88 per share. Again, it's a online retailer of pet food. Was last year this time trading about $34 per share. I don't really know the guidance on Chewy, how much farther it can go. But it is a good company. But like I said, I don't think, okay, so it's had a 52-week high 120. I don't see it getting back to that. But if you like pets and you like e-commerce, it is a good stock to have in your portfolio. Maybe at some point they will start to pay a dividend. But I believe all the growth is really sucked out of Chewy at this time. You may see some minor bumps, like maybe a 10%, but I don't see Chewy getting back into the hundreds. But if you like pets and you just want to own some pet type stocks, Chewy may be a buy. All right. So these were 5 stocks, as I talked about here on Earnings Whispers, that does report this week, 8:30 August Monday, and through Friday. Docusign will be reporting. I want to thank you for watching. Thank you for listening. Please like, share, and leave a comment below. Also, don't forget the Webull and the RobinHood link that I'll have below to sign up and get your free share stock. Thank you.